With that being said, what we have to do to make trading work for us and not us work for the charts, I did mention again last week as a nice catch up. I spend probably an hour at the charts every day. My main focus, to be honest with you right now, because of what I'm doing out here in Central America, is to just put all my focus towards gold. I am looking deeper, a lot deeper into. I'm already quite aware on what's going on in the world. I have been for the last 10 years or so when I started to put heavy research in back in the day, and I'm now accumulating price action, world awareness, and also solid, deep fundamentals to the game of the US dollar index and the gold market. And I'm going to be focusing mainly just on gold going forward, just to, again, have that full formation triangle of knowledge there, but also have solid awareness on where this is going, because again, the movements on this, which we've just maybe even scoped out, we're looking at 500, 600 points, 600 pips, sorry, 50, 60 points per move on spot gold. And it makes our life a lot easier. So we can actually start to push our chart time down. Our education could be just 1 hour a day. Our chart time could be just 1 hour a day. And that, 20 times a month, 20 days, 20 trading days in a month. After one quarter, you could be in a whole different position, different stake, and also have much more knowledge on how the market works and allow it to work for you. So you're not trying to trade every session of the day. Where we have the price action scope, we have the fundamental scope, and we just also in the back of our heads know that things are very unpredictable right now. So let's get back into the gold chart. What we can clearly see here is that we have, even with the crosshair, let me just put this crosshair black. Give me un momento. Okay, give me 1 second. Crosshair, bro. Crosshair black, and we want to thicken that up. Okay, beautiful. All right, so low high. We didn't quite reach. If I was to go on, and again, the way I've got my chart set out, I can just simply copy that, boom, paste it here, and be prepped on this 4 hourly. So what I was expecting last week, guys, as you guys know, was a push up to the high, violent, and then a drop. We didn't get that. We're not going to get the perfect scenario, dip and dive, or dive and dip through one of our previous weeklies, and the market is just going to be there for us, and we're going to get the best piece of price action that we can jump onto. I did mention that this cycle right here, again, we're coming into Monday, Tuesday right now. I feel that, again, number one, what's quite important too is I've just copy and paste this area onto the chart. And again, this goes quote unquote, so to speak, with every other instrument, oil, currencies, gold. All we have to do is wait for the perfect time for the market to give us the price action and give us the data and give us the fundamentals in which we can then pick up on potentially what the next cycle is. So if we look at this right now, we've got the lower highs into last week. Okay, I feel that we're in this lower high, choppy formation of whereas maybe Monday, Tuesday, we could get a bolt to the downside. And again, guys, as you just seen, you can replay this tape afterwards. We can see a spike through into our weekly, and then we can start to look at loading up orders to the upside. Number one, back to the weekly high, and then maybe in through that, or maybe a straight rebound. Again, you have to keep up the price action day to day, session to session. But where we can actually cut time and cut energy is by not trying to, this is a 4 hour time frame, not trying to capitalize on every single small move where your head is going around in a tornado sense, and we're not actually enjoying life. We're just sat at the computer all day. So my personal thesis on this right now is the opposite of last week. Why? Because market conditions have changed. Market conditions are now showing me that there's something different on the table, but it's the same thesis as to what's going on. Now, other points which we need to label important is number one here. We have this. We have the new low that was formed. Then we have a higher low. Now, what the market needs to supposedly do is, okay, we also have this area which is quite tight. So we could expect to consolidate here and then boom, or we could give a nice fakey low and then to the upside. If we make this fakey low here and actually provide the week low below this area, what we can expect is, guess what? We at a higher low in comparison to the previous. So new low created, territory unmatched, secondary low created, territory hopefully is going to be unmatched within the next few days. Midweek reversal, we can maybe consolidate, piss about, come through, stay ahead of the game, stay ahead of 1701. Look at the fundamentals. Now we've had this big conversation as how technicals and price action were giving us a 75 to 80% reaction up until COVID. But we've explained that the economic uncertainty, the transition from FX into cryptos and other spheres of wealth, the major institutions and the major banks now looking at diversification, not even when it comes to the investments, but also because in the city of London, people cannot go to work as usual. Businesses need to adapt or die. So the volume in the Forex market is steadily dropping. However, that means price action won't always be king, but we now need to look at solid fundamentals for our knowledge and growth and certain go in. And again, this stuff remains the same. And all I've done, guys, just to throw out there, okay, for anybody who's new on this webinar this week, I broke down gold last week and I told you exactly why we are looking at certain areas in the market to plot our weekly foundations and our swing foundations. All right. So I haven't actually gone in and changed those. All I've done is just put 4 screens up just for the sake of this webinar. So I haven't gone in and I have not change anything over here. I don't need to. The analysis is the same. All I have to do when I come to the chart on a Sunday evening or Monday is spend 5-10 minutes looking at the previous week performance, which is right there, if that makes sense. So with that being said, okay, gold, as I say, the monthly is quite hectic. We are coming into a new month right now. There's nothing, again, you guys have seen the PA rollout I've just done there. But what I would also like, let me just delete all of these right now. What I would also like to submit on this webinar and just give a point to everybody, all of the attendees, is that, okay, escape, is number one, we're looking at a potential wedge formation over here as well. Now, I would look at, all I've done here is mark out the highs and the lows of the bodies of the 4 hour. I would look at also any formations. I wouldn't take formations as like a holy grail or anything superior. If I see it with my eyes, I'm just going to throw it on there. So what we could see, we can see this as well. And again, this could also be a point, part and parcel to maybe even coming down to these levels, extending and coming to the beyond and giving us that major trade setup. So as long as we're above like 1710, go back in the video, you guys have the weeklies, we could be heading into 1765 and beyond. Now that risk reward there, if there wasn't anything last week, because I did, now this is very, very important. Last week, I gave a few potential trade setups. As I give potential trade setups, I'm not just going to be here talking about, oh, this is doing this, is breaking out, blah, blah, blah. To be honest with you, I don't even plan for these webinars. I don't even plan for technical analysis. To me, I'm just channeling information as to what I see, and I'm just throwing, added gems in from time to time. But for me, it's more like it's a psychological component. You have to always think about the psychology of the other man who you're against, or the group that you're against, or the fuckery that you're against. So as we go through this is why you have to stay non-emotional in the facts. And again, last week I gave a trade setup and it didn't happen. The spike into the high and the drop into the low. However, new data has been performed. I have 5 days of new data, okay, the performance of the market, which is now changing my mind as to last week. Did I sell gold? No. Did I buy gold? No, I didn't do anything with gold. Why? Because it did not go through the level that I was expecting the gold market to go through before selling. So I'm not going to touch it. Okay, guess what? Last week wasn't a week in which we could make a lot of money for the market. It wasn't a confusing week. It was a neutral week. So the neutral week right now, reading it again, is telling us it's repainting the story, so to speak. It's given us further insights and further clues right now as to what can happen.